And to me, when you see something like that, right, that's significant. So I think that the high is in, the top is in for the dollar. And if the top is in for the dollar, that means the bottom is in for inflation.
Get ready for a dose of economic reality with Peter Schiff. In today's video, Peter warns that a crisis is imminent, and it's poised to be more severe than many anticipate. Despite gold's current price stability, Peter emphasizes that it's just the calm before the storm. Don't be deceived by the apparent stagnation. Gold is building a formidable base, and when it takes off, the ascent will be swift and substantial. Now is the time to act, to secure your financial future. Join us as Peter Schiff shares insights on preparing for the looming economic challenges and why getting your house in order is more critical than ever.
Because clearly, the economy is not so good that this is the second best month in the history of new jobs, new companies being formed. Based on the record increase in bankruptcies, there's probably actually a record number of businesses going under. So my guess would be that the birth-death model actually eliminated jobs. It didn't add them. So we probably lost jobs in the month of October. Again, I know that the one kind of jobs we definitely lost were full-time jobs. In fact, in the October report, the weakest number was manufacturing. We lost 35,000 manufacturing jobs. These are the productive jobs. These are the goods producing jobs. They're also high paying jobs with benefits. We lost 35,000 of those and we gained 51,000 government jobs. Again, not only do these government jobs run up the deficit and are therefore inflationary because they're ultimately going to be financed by money printing, and if they're not, well, they're pushing up interest rates, and so you're going to pay for it that way. But the government jobs don't produce anything. The manufacturing jobs did. Whatever they were manufacturing, now they're not doing it. So we get less stuff. We have more government workers who want to buy stuff. When a government worker gets a paycheck, he can take that paycheck and go buy things, even though he didn't do anything to help make things. In fact, most government workers get in the way of the productive process. They're there to, impede production with bureaucracy and tied up in red tape. I wonder how many of those employees were the new IRS agents. We're losing manufacturing jobs, but we're hiring more IRS agents to harass those small businesses that haven't failed yet. I mean, is that economic strength that we're replacing our factory workers with IRS agents? I don't think so. And who knows what other areas of the government these guys work. The problem is they're not productive and they're going to run up the deficit. We had a delayed reaction. The dollar got clobbered on Thursday and then clobbered again on Friday. And what the dollar did was very similar to what gold did in the other direction weeks earlier. And I pointed that out on this podcast as well. The dollar index put in a reversal week, outside reversal week, where the dollar index during the week, and this is last week, traded above the previous week's high, and then not only took out the previous week's low, but closed substantially below that low. And to me, when you see something like that, right, that's significant. So I think that the high is in, the top is in for the dollar. And if the top is in for the dollar, that means the bottom is in for inflation. Because the main reason that the official measures of inflation came down from 9% to closer to 3%, now they're headed back up. But it wasn't the rate hikes. That's not what did it. I mean, the rate hikes indirectly did it. What did it was that the rate hikes made the dollar go up. We had a big rally in the dollar on the rate hikes. That brought down the cost of imports for the United States. A lot of commodity prices went down. And so that was a major factor in bringing down headline CPI. Remember, core CPI never came down nearly as much as the headline. It didn't go up as much. It didn't come down as much. So it's remained, more in a 5% range or something like that. But we got the headline number down, really thanks to the strong dollar. Well, if the dollar is now topped out because people can figure out that the Fed is pretty much done hiking, and looking at the underlying weakness in the economy, that we're headed to recession if we're not already in one, that the dollar is sniffing that out, and now the dollar is falling, that means we're going to see renewed upward pressure on commodity prices, oil in particular, which has pulled back but is now, hanging out in the low 80s. But again, I think it's getting ready for an explosive move well above 100 and beyond. And other commodities I expect to participate in this big rally. That means that inflation is going a lot higher because now the dollar is going down. And what's the Fed going to do about it at this point right now? If they're done hiking, and I'm going to talk about that in a minute based on Powell's statements and the Q&A, but how's the Fed going to react to that? And they've already raised interest rates 525 basis points, and inflation starts to head up. Meanwhile, again, we can't play around with a strategic petroleum reserve, because that's also one of the main reasons that the headline number came down, was because we dumped all this oil on the market to try to artificially suppress the price of oil, which we were able to do in the short run. But the problem is then you run out of oil, and now in the long run, the consequence is you get even higher prices, which I think are going to arrive by the election. So Biden was able to save the Democrats in the Senate in the midterms by dumping the Strategic Petroleum Reserve. But he's not going to be able to do that in the general election. And the markets really, the betting markets, I'm surprised. I look on predictit.com, and I've been watching that, and the Democrats are still favorites to win. I mean, the margin of error, or I think it's like 56 cents for Biden and like 46 cents for Trump, or not even Trump, Biden, just Democrat, Republican, because, Biden might not run. I mean, Biden is so unpopular, just about any other Democrat beats him in a hypothetical matchup with Trump or anybody else. So maybe the Democrats will do an LBJ and kick him off the ticket and put somebody else up there, because they know that, if he's the standard bearer, that, it's going to sink the ship. But despite these polls that are coming out showing Trump, winning in a big way, it hasn't moved the needle at all in these betting markets, even on the Republicans, because I can see some people think, well, maybe Trump won't be able to run. Something's going to happen that's going to disqualify him or something. It doesn't matter. I mean, pretty much any Republican should be able to beat any Democrat, given, there's really not that much difference. I mean, there's some difference, but, I mean, it's not dramatic the way it should be. I mean, they're all big government Republicans, Republicrats. But this is what the government has a history of doing, no matter what. And they're doing the same thing again. So we are going to have this crisis. It is close, and it's going to be far more severe. The impact is going to be far greater. You look at the price of gold, it's still not going up. It's 1980. That's fooling people into thinking, hey, gold's not taking off, so it can't be that bad. It's going to take off, and when it does, people are going to be shocked by how rapidly it rises and how much it rises. So don't be fooled. Oh, it hasn't gone up yet. You know what? It hasn't gone down either. And it's building a base, and it is going to rocket. So right now, just got to get your house in order. Contact Schiff Gold. Get your gold and silver. Talk to the reps at Your Pacific Asset Management. Get your financial house in order before the house of cards, that is the U.S. economy, comes collapsing down. That's it for now.
Gold, the harbinger of economic shifts, sits poised for a significant rise. Peter's warning is a call to action. Don't be misled by the current calm. Now is the time to fortify your financial foundation. Take the first step by reaching out to Schiff Gold, securing your gold and silver. Remember, it's not a matter of if, but when the economic house of cards falls. Thank you for joining us today. Let this be a catalyst for proactive financial planning. Stay informed, stay prepared, and, most importantly, stay ahead. As a form of appreciation, we hope you will hit the like, share, and subscribe buttons. Thank you again.